you may or may not know, the 2021 contribution room is fast closing. It's in a few days now. March 1st is the deadline for the registered retirement savings plan contribution room for the 2021 year. So I wanted to take some time to answer some questions that you may or may not have and give some insight as to what the registered retirement savings plan is and how you can contribute to it and what sort of plans you should consider for the registered retirement savings plan. My name is MJ. Thank you for joining, and let's dive in. So what is a registered retirement savings plan, or RRSP, as we know? So this simply is a tax savings account or tax deferral account, and it can be one of both depending on how you want to use it. If you're just looking to reduce the amount of your taxable income, you can contribute to your registered retirement savings plan, and that will reduce your taxable income. A good example of that would be, say you make $100,000 and you're taxed $20,000 on the $100,000 income. If you contribute $10,000 to your RSP, you're now going to be taxed on $90,000 as opposed to $100,000, saying your taxes in this case are 20%, dropping your taxable income to $18,000. Now you get $2,000 back in taxes because you've already paid those to the government and your taxable income has reduced. The second case in which I said it is a tax deferral account, if you're investing, a registered retirement savings plan is a good account to have to shelter some of those investments and defer the taxes to retirement or just to a later date. So if you invested $1,000, for example, in your registered retirement savings plan and your gains for the year was $200, you wouldn't be paying taxes on those gains. That's capital gains on $200 that you've gained. It will just remain in the RSP, and whenever you withdraw it, you get taxed. Which brings me to point number 2. So all the money invested in the RSP is taxed at a later date, usually when you pull the money out. The retirement savings plan is most effective when you retire. Pulling the money out of the registered retirement savings plan is most effective when you retire, because usually when you retire you have a lower income, and by that you're in a lower tax bracket, so you're taxed a lot less or a little less depending on your taxable income for the year you retire or the year you're pulling the money out. So how much can you contribute to your RSP? Now the rule of thumb, or the way the CRA puts it, is you can contribute 18% of the previous year's income. So again, in this example, if you make $100,000, 80% of that will be $18,000, so you can contribute up to $18,000 into your RSP. However, there is some wiggle room to this. I believe it's about 1% of the amount, or $2,000. I'll double check, but you can contribute a little bit more without getting any penalties. But if you pass the limit of the 80% or the room sets, you will be charged a penalty of 1% until it's rectified. There's a few registered savings plan options you can consider. If you're not an investor or you just want to have a registered savings plan to reduce your taxable income, you can just go for the regular DSAP, which is a direct investment savings account. It's under the RRSP umbrella. It's just a regular savings account under there, so the interest is not, don't expect outstanding returns. It's just a regular savings account. Again, I'll say that. Every bank or credit union offers it here in Canada, so you can easily get one at your current financial institution and make a deposit into the account. Now, if you are more an investor, you can set up an investment with a registered retirement savings plan shelter. Banks like TD call it direct investing, CIBC calls it Investor's Edge, and so on, and for all of the other banks. Reach out to your financial institution, let them know you want to set up an RRSP for investing, and they'll be able to guide you appropriately. Now, there's other breakdowns to the kind of RRSP options you can consider. We're not going to go into too much detail in this video, but just for your awareness, if you wanted a guaranteed investment account for your RSP, you can get one through also your financial institution, where they would guarantee an interest rate over a period of time, 3 to 5 years usually, with a fixed interest rate, and you'd be getting that at the time the GIC matures or the guaranteed investment certificate matures. You can also do mutual funds with your RSP, which someone else would invest on your behalf. This is not a direct investment option, so that is something banks also offer, so you can also consider that as well. Finally, how can you get an RRSP? Well, any bank, financial institution, credit union, or even any investment platform here in Canada will offer it. And just give them a call, register online. It's simple to get. As long as you have a social insurance number, you'll be easily registered and any of your contributions will register with the CRA. I want to say thank you for watching. If you have any questions, let me know in the comment section and I'll try to do more of these videos as time permits. Thank you again and have a good day.